What if assets shaping our global economy weren't stocks or cryptocurrencies, but something far older and tangible and often overlooked? That's commodities. There's a reason why gold, silver, oil, and agriculture have been quietly rewriting the financial narrative, yet their significance is hidden in plain sight. Despite all the hype and hoopla, are we entering into another commodity supercycle? And what does it mean for your wealth? In this quick take, I want to share 3 critical insights into commodities and explain why you need to pay more attention to it than you have in the past. Let's talk about this one. All right, so wanted to take a quick minute, share some thoughts in reference to the commodity cycle. And so right now, because gold and silver is not getting out of attention because of the price suppression mechanisms that are in place, then again, we have Bitcoin still in all the thunder. And as of right now, altcoins appear to be running with a variety of older cryptocurrencies that seem to be stealing a lot of the attention from gold and silver. But then again, it's just a matter of time before the public realize what the mainstream narrative, as well as even our own government, would have them not want to pay attention to. And of course, that's real tangible items in a world that's going digital regardless. But in this video here, I want to share my thoughts on some things that's worth paying attention to just to keep you up to date and mindful of what real, true, tangible wealth is. And it has nothing to do with ones and zeros on a computer screen. So as always, if you guys want to see more of these little short quick takes, definitely hit that thumbs up button to show your support for the channel. And if you're new, make sure you subscribe to stay plugged in when I put out these updates, which I try to do several times a week at best. And as always, there's no point in talking about the problem that we're experiencing when I'm offering a chance for you guys to take practical and actionable steps to protect and preserve everything you work hard for. And that's why I want to continue to remind people of the importance of getting your weight up. And what I find to be the most effective way to do that is to actually have your own silver business. And as you can see here on the screen, this is a landing page to the silver team. So on this store page here, by actually joining the team, you can get access to your own personal store where you can become your #1 client by being able to save in gold and silver products here, and then also take this store and share it with your family and friends so they too can become members or customers to your own personal store. So it's clearly the best way to get in the silver business and be able to profit off of it by having your own store and helping other people get their weight up as well. And then lastly, if you haven't taken advantage of the chance to get the most affordable 24 karat gold notes as a way to redeem some of these Federal Reserve notes while they still have purchasing power in exchange for 24 karat gold notes, then here's your chance to do that. As you can see on the screen here, we have fractional reserve notes all the way from 1 unit all the way to a 50 unit note. And you can find out more about that from the link in the description at buygoldnotes.com. And it's just another way to diversify your portfolio as we head into what I believe will be very turbulent times in the days ahead. But the very first one of the critical insights in reference to the commodity cycle that I want to talk about has everything to do with the economic roller coaster ride that we're on right now and what's coming ahead. See, everybody has to remember the cyclical nature of commodity prices because they're as predictable as the seasons. It's like between booms and busts, all within usually a 10-year time frame based upon global and economic conditions within developed nations. So historically, as you can see on the chart above my head here we have listed copper, corn, wheat, and soybean. And just referring to the green line above, which is soybeans, you can tell that, as I mentioned, every 5 to 10 years or so, there's a sudden spike in the fiat price to soybeans, and then there's a major correction. As you can see here, starting in 2007, 2008, that's when things really begin to take off, where the price of all these commodities seem to go outrageously higher than previous cycles in past. And as we can see on this chart here that ends in 2022, all 4 of these commodities are substantially greater than they were decades ago. But yet the times we live in now are way more volatile and concerning like never before, because what we're experiencing now, in my opinion, is a debt crisis on many fronts, whether it be sovereign debt, personal debt, private sector debt, which eventually will lead to a sovereign debt crisis, which ultimately means these prices that we're seeing now of just these 4 commodities here are going to be considered low compared to what they're going to be once governments globally come out and turn on the monetary spigot of unlimited quantitative easing, which is basically going to flood the economy with fake currency, therefore forcing the price of all these commodities here to go through the roof. So there you have the economic roller coaster ride that we've been on for decades. But what's potentially coming in the days ahead, we could have never imagined the type of currency they may end up needing to create to try to keep this Ponzi scheme under wraps. So a great example would be the picture of sponge. As demand soars, the sponge is squeezed, reflecting prices that need to rise. But as the production ramps up to meet the demand, the market ends up flooding, which basically means price drops. So just to highlight that, in the 2000s, the CRB index, which is basically a key measure of commodity prices, from what was considered peak in December of 2000 at about 160 or so, at the peak of the dot-com boom. But as a result of market activity, we see it peaked out in June of 2008 at 458 and immediately fell off a cliff all the way back down to 229 within that 8-year period. And that was a result of the financial crash that dragged it down. Now, after a 12-year low, a lot of experts are now arguing that we might be on the cusp of another commodities breakout as we're witnessing the current index price reaching a peak not since 2011. For investors, it's like waiting for a roller coaster ride, knowing that a thrilling drop or rise is around the corner. So the main takeaway is that timing matters. And so the current setup that we're witnessing now resembles the early 2000s, suggesting that an upward trajectory could be around the corner. And that's just on the agricultural side. Let's not forget about gold and silver, because that is the anchor, a sea of chaos. For the simple fact that gold and silver are not just shiny trinkets. They've been historical lifeboats when fiat currencies fail. Unlike other commodities, their stock-to-flow ratios give them unique stability. Gold, for instance, has around 65 years of above-ground supply, making it less volatile than wheat or oil. then I think the best analogy would be to think of gold like a treasure chest in a storm. When the economic waters get rough, central banks and investors cling to it for safety. And so recent turbulence in currencies, with gold hitting all-time highs in euros and pounds and dollars, is a key indicator of its enduring value. Meanwhile, silver acts like a hybrid. It's both a safe haven and an industrial workhorse, reflecting economic health while protecting against its decline. With governments leaning heavily on money printing and fiscal spending to prevent crises, gold and silver are poised to lead the commodity pack to figures that we've never seen before. Ultimately, their steady rise suggests that they're not just an investment, but a shield against economic unpredictability. And then third, you got oil and energy, which is the engine behind these indexes I'm talking about. See, oil just isn't a commodity, it's a backbone of the CRB index and a lifeline for modern economies. Yet its volatility can make or break an entire industry. After plummeting during the 2020 pandemic, oil has been clawing its way back, hovering around $70 a barrel, reflecting its global recovery. So with these three insights, why does all this matter is a question. You see, the cyclical nature of commodities, the stability of precious metals, and the dominance of oil tell a story of power, resilience, and economic transformation. So ignoring these trends could mean missing out on opportunities, or worse, being blindsided by the ripple effects. See, while commodities may seem like the financial world's quiet giants, their impact roars loudly in times of uncertainty. So understanding their movements isn't just a savvy move, it's essential for navigating today's complex economic landscape. In a world of digital distractions, it's crucial to understand that real wealth is still tangible items that's needed to make economies run smoothly, as well as to sustain life. Because without these assets here, society wouldn't function nowhere near the way it does now. And so while there is a place for digital assets in one's portfolio, let's not forget about the tangible stuff that the mainstream media will love for you to forget about, and eventually put all your funds into the digital stuff, because that's where they will make the most money from. But anyway, just taking a minute, sharing with you some things I think is worth touching on. Curious to get your feedback on this. If you got thoughts, ideas, suggestions, feel free to drop in the comment section, and I'll try my best to answer it accordingly. But other than that, just taking a minute to keep you up to date on what's really important, in my opinion. Other than that, catch you guys later. Peace.